Right, welcome back. In this video, in this session, what we're gonna do, we will look at the requirement fee of the scenario 3 from March 2021 exams, and we're saying with the reference to Exhibit 2, and assuming that no further adjustments will be made to the financial statements into the railway operating license or the chairman's statement. um, Evaluate the appropriateness of the draft auditor's report produced by the audit supervisor. So exhibit 2, where it is, here it is. Exhibit 2, exhibit 2, update and the draft auditor's report. It is now July 20, now 22 July 2005, and all the matters in relation to the purchase customer list have now been satisfactorily resolved following the submission of the customer position to the government complaining about the company's poor service levels. On 19 July 2005, the government released a statement announcing that it had withdrawn Mate Company's preferred bidder status and was reopening the tender process for the National Railway license. The company's finance director has provided details of short disclosure note to he plans to include in the financial statements, which refers to the uncertainties in relation to the current status of the tender and possible going concern issues which might arise for the company as a result. The disclosure note concludes with a statement that the management of Mati company is very confident that the company will be successful in the tender process and that it will retain the national railway license for at least a further 5 years. The draft auditor report includes an unmodified opinion, audit opinion, and a key audit matters section, which refers to the disclosure note described above and to related uncertainties in relation to the Metis going concern status. Cool. Now, let's bang on for this part of the question. 5 marks available for it. Appropriateness of the draft auditor's report. So the finance director has agreed to include a short note to the financial statements to disclose information relating to the material disclosure is not adequate. A modified opinion would be appropriate in relation to a material misstatement as a result of the inadequate disclosure. The form of the opinion would be qualified except for or adverse depending on the auditor's judgment of the matters pervasiveness to the financial statements In this case, adverse may be the appropriate form of audit opinion given that the disclosure note is described as short and that management may appear to negate the significance of the uncertainties by stating that they are very confident that they will be successful in the tender process. A full description of the status of the tender negotiation as at the date of the auditor's report and their potential impact on the financial statements should then be detailed in the basis for qualified or adverse opinion paragraph, right? However, if on the other end, the outcome of the auditor's assessment is that the client financial statements, disclosures are considered by the auditor to be appropriate. The material uncertainty in relation to going concern should be disclosed in a separate section entitled Material Uncertainties related to going concern, which should appear immediately below the basis for opinion paragraph and not in the key audit matters CAMS section of the auditor's report. According to ISA, according to ISA 570, the material uncertainties paragraph related to going concern should draw attention to the note in the financial statements which discloses the going concern issue. State that these events or conditions indicate that a material uncertainty exists which may cause significant doubt on the entity's ability to continue as going concern, and that the auditor's opinion is not modified in respect of the matter. Right. Matty Company is a listed entity according to ISA 701. CAM disclosures are required in the auditor's report for high risk areas, significant judgments, and the effect of significant events or transactions which occurred during period. The assessment of the useful life of the customer list as indefinite and management's consideration, management conclusion that the intangible assets are not impaired are areas of both significance, significant judgment, and high risk given their materiality. The auditor should consider disclosing these matters in the CAM section of the auditor's report. In addition, to these considerations, if the inconsistencies between the chairman's performance and the financial statements are not resolved through discussions with the client. They should be disclosed in the other information section of the auditor's report. Right, so that's it for this part of the question. That's how you should draft the scenario. I just same approach I had, just applied my knowledge line by line of the scenario. Right, that's it for this part of the question. I hope you got it. See you next time.